Good evening, Dan here on Monday, January 4th, 2016. Look, hope I didn't offend anybody with that. If so, just think about a wall keeping water back. Look, we got down 1.5% today. At some point, we were down over 2%. I want to just caution you, like, this is not the mother of all buying opportunities. A lot of times, it's funny, I see this is a total spectrum here, but there's two extremes in categories of traders. The one extreme that you see a pullback like this and you just got to buy. This is an awesome buying opportunity. Look how much the S&P's down. And then the other extreme is I have to sell everything that I have because the market's down, and I don't want to take my head out of the foxhole for a long time. Somewhere in between is really, in my view, the right position. But, no matter where you are, there you are. No matter where you are, I just think it's important to have a large cash position. This is a really choppy market. It's a real dangerous market, and anybody who says otherwise is a jerk and doesn't deserve to be listened to. Somebody asked a really good question today in the forum towards the end of the day. Let me make the chart just right. And the question had to do with, the 3-day rule. Hey, if we close, I think the question was if we close below 2,000, but we don't have to put a number on it. Essentially, like if we close down, look, that's 3 days in a row. 3-day rule in play, meaning typically on the 3rd day or here perhaps the 4th day, we get a bounce. Is it one of those, or is it going to be one of these? Okay, we don't know whether it's going to be one of these, though I will tell you right now, as I see it here, no, I don't think it is. I am very cautious about this market for reasons that I'll tell you in just a second. But I think tomorrow, absent something weird going on over in China, which fast forward to about 30 seconds from now, I think tomorrow the path of least resistance is probably higher. I don't know how much higher, because think about what I've been saying recently, which seemed to resonate with a lot of people. There's the selling part of the channel, the buying part of the channel, and then there's the yellow means wait even if you're late part of the channel, if this is the channel, give or take. So we've hit a low here today, and now we're coming back up close to the yellow zone. And I really think this is no, it's not overly simplistic. This is simplistic, but I'm telling you, man, trading really isn't that hard. We make it hard. I've been doing this for almost 20 years. And it's amazing to me how some of the mistakes that I made back then, I still make, just not as often, but I still make them. But one thing that I've taught myself, and maybe you're different, if so, good for you. My brain is what makes my trading the hardest, because I overthink things. I'll see something and then I know what that means, but then I'm overthinking it and thinking like, well, if I see it, then everybody else sees it. And if everybody else sees it, then maybe it's all factored in. And if it's all factored in, then maybe it's going to go the other way, which means that what I see right now is wrong. But then wait a minute, maybe if I'm actually right after all, oh crap, I don't know what to do. Why don't I just go get a martini? Seriously, it's if we instead just literally suspend intellect for a minute and just think about the emotions and the financial dynamics that we're seeing right now, that we're experiencing right now, I think that is our edge. As I was preparing to do this, I tend to start during the last hour of trading, and then after then I'm making my notes, the notes that you see, and then I revise them and change them and this and that and the other thing. But as I was preparing these, I hear Jeremy Siegel. I forget what Ivy League school he's a professor of. Let's just say Harvard, because that's supposed to be a good one. Very bullish. I think we're going to get 10 or 15. This is my best Jeremy Siegel. I think we're going to get 10 or 15% this year. I'm very bullish. And then right after him comes somebody else who sounded equally as smart, who thinks that 2016 is going to be a tough year. And so one of those two is going to be right, or neither one of them is going to be right, because we could get a year just like we had in 2015, which is Jerry Lee Lewis market, a whole lot of shaking going on. But at the end of the day, not really much progress one way or another, either up or down. And so this is where the suspension of intellect comes in. Be long common sense, but don't think you know more than the market. Because I'm here to tell you, you don't. You just don't. As smart as you can be, you're not going to get smarter than the market, because the market is, in the aggregate, one big, massive clump of people, all of whom are making independent financial decisions. But because all of us are wired the same way, that big, massive bunch of people tends to take action at the same time at roughly the same price levels. That's why you get these types of big, massive sell-offs, and then all of a sudden, like, boom, okay, selling over everybody, everybody goes up at the same time. That's just what makes charts. And my point is, you can be really, really smart, but you can't go against the crowd, because the crowd, it can be exceedingly stupid. But the wonderful thing about being a part of the crowd is, because you're among friends, you guys all get to group together and decide what the definition of smart is. And so this is why, and I'll get to, I might as well do it now. It's a great segue here. This one, NHTC. Remember, I'm talking about your first loss is your best loss here. Remember how, I was talking about this stock. The company has great fundamentals. I'm looking at the fundamentals. They're great. Strong earnings, strong revenue growth. It's all good in the hood, except for the chart. It is best to take your first loss when you see that something is wrong. Look, it doesn't matter if you're right or wrong. You just need to make money. So you can be right about this stock, about the company, that the company's great and they're going to do well and this and that and the other thing. That's fine, but you don't make money because the company's doing well. Unless you seriously are like an owner of the company where you get to take some of the profits. See, as a shareholder, you don't get to take any of those profits unless there's a dividend. Big whoop, 60.6. As a shareholder, you do not get to take home any profits. Think about your job or the business that you own. Every 2 weeks, man, you're skimming some money out of somewhere. Take that money home, pay the rent, pay the mortgage, buy your wife or your husband something that they don't need, but makes you seem really thoughtful. I know that game. Anyway, the point is that you don't get paid from any of that. You get paid from capital appreciation. You get paid from the stock going up. So the only thing that matters is the direction of the stock. Gary and I have this running joke. Gary says he doesn't know anything about trading. All he knows is this: buy low, sell high. Well, you know what? That's all you need to know. The money, though, is made on the in-betweens. It's made in the waiting around. It's made in the waiting around between buying and selling. And that's also where the money is lost. Now, I'm giving you pearls here. So listen to me. Write it down. If this is an epiphany to you, good. Make sure you only get this epiphany one time. Write it down. You only make money when the stock moves in the direction that you think it's going to move, that you think it's going to move to such an extent, to such a degree of confidence that you've actually put money on it. Now, I mentioned this in a note, I think it was last week, comparing, I don't know, like Irv the investor with Timmy the trader or something like that. And I'm saying, like, however you pick stocks, if you use fundamentals, okay, that's great. You're more of a long-term holder. If you're a trader, you are a short-term holder. And by the way, okay, embrace the horror. You are. If you only hold stocks or options for a certain amount of time, that means you're a trader. You can think you're an investor, but if you're flipping a stock when it's up 5% or 10%, you're not an investor. You're a trader. Embrace it. That's what you are. But the point is, whether you're an investor, whether you're a trader, you make money in between the buying and the selling. And if the stock is selling, if it's moving down and you are holding it, the fundamentals truly don't matter. As we can see by these little blue lines right here, which is where the stock is trading right now. Point is, back here in mid-December, the stock broke below the 50-day moving average after printing a lower high. Okay, this is an issue. This is a problem. Okay. Oh, well, we're okay. Woo. Oh my gosh, there we go. Look, it's all good. We're here. And again, listen to me, man. Don't be sitting here going like, well, where's the stock picks? What do we buy? No. You know what you buy? What I'm telling you right now, what I'm selling you right now. And the good thing is, if you're watching this video, you've already bought it because you're paying for this. So listen up. Here, symmetrical triangle. Oh my gosh. Now we're ready to go higher. I knew it, Fitzpatrick. That guy is such a great trader, such a great analyst. He's talking about the fundamentals. Awesome. Thank you so much, Dan, for getting me into this stock. Love you, baby. Okay, well, so far so good. Oh, yeah, crap. Suddenly Fitzpatrick ain't that smart. Well, we're looking at this here. What do you have? You don't have fundamentals anymore. What you have is a stock that peaked here, traded lower and lower still, low, higher low. This is the OS low, or put another way, the oh crap low. This is when you know you're wrong. Now, the stock was up. There are plenty of opportunities here to sell as well. Like this one was a big sell-off, and I'm pretty sure, but I could be wrong, I'm pretty sure I was talking about this saying like, guys, the uptrend is still technically intact, but man, when you get a sell-off on this kind of volume, I'm pretty sure I remember saying this, when you get a sell-off on this kind of volume, it's not because people forgot to buy or they were away from their desks or something like that. It's because the stock is being sold. It's being sold by institutions. So this was truly your first indication that something is desperately wrong with this stock. But even if you're holding it all the way through here because of the fundamentals, this is absolutely your exit point. 40 bucks. 40 bucks is absolutely your exit point. So now here we are here at 30 bucks. If you're still holding this stock, shame on you. You took a 25% haircut from the obvious time to sell, from the time that it was clear to all but the most casual observer, which is my tactful way of saying the dimwit, it was clear to everybody except the dimwit that this was a stock that you needed to get out of. So take this lesson. If you're the dimwit, if you're the guy I'm talking about, well, guess what? The good news for you is you don't have to be that guy ever again, okay? And the good news for you is you're in good company because we were all that dimwit at one time or another. So learn from this. If you just say, you know what, I'm done, Dan, I can't listen anymore right now, you've got your money's worth listening to this part of the video because this is how you make money. You make money by not losing money. I'm looking at my trading account today, one of the ones that I use for short-term stuff. Do you know how much money I lost today? And I only actually made one trade, but I bought some Lululemon. Do you know how much money I lost today? $29.25. That's like a rounding error. In other words, everything was like whatever was up was offset by something that was down. Whatever was down was offset by something that was up. I've never had a day that was so flat other than like a Saturday or a Sunday or a market holiday in this account. So my point is that while everything is getting crushed, I've already been out of stuff. Not in a long-term account. I'm not talking about that right now. But I was already positioned, and I know a lot of you have been too, because I've gotten your emails, and I appreciate you letting me know. It makes me feel good about what I'm doing. But you don't have to get hurt by this market. What you have to do is embrace the fact that you're not going to make as much money in this kind of market as you would in this kind of market. So we don't really know which way this is going to go. But this is what I know. Okay, this can fall further. It's a Halter China index. Okay, this can fall further. This isn't a big deal. But here's what you need to know. Last summer, the Chinese government propped up the market by by making it against the law for big shareholders to sell. If you own 5% or more of a company's stock, you can't sell. They'll throw your butt in jail back there, okay? So much for capitalism, right? Okay, well, those chickens always come home to roost when that happens because, and Janet Yellen, you know, she's much of a moron as Bernanke and Greenspan were and still are since they're both with us, in that central planning cannot control the market. Think about what I was saying about the crowd. Nobody can control a crowd of people for more than a minute. Okay, so the Chinese government was trying to do that. They were basically, think about it this way. This isn't really a rant. It's just a comparison that's never been made in public before by anyone, at least that I've heard. What China was doing in banning selling in the market is actually the same thing that the Fed has done for the last couple of decades in basically banning selling. Only the Chinese government was doing it, you know, by law. Like here's the law, boom. The Fed was doing it by engineering, forcing any clear-minded person to go like, you know what, I can't make any money anywhere except in the equity market. I mean, the yields are so low, blah, blah, blah. So what is that saying? I can't sell my equities because I have no place else to go. So what the Chinese have been doing is just a more obvious form of what the Fed has been doing. And again, those chickens are always going to come home to roost. Look at this. Okay, this is a delayed delayed quotes here. Okay, so this isn't what this market looks like. It's actually down to 32.90. Look at the lower left box here on the box. 7% down. This is where the SSEC fell to. 7% down from where this is. So this is a major, major pullback. And here's the thing. That ban where the Chinese said, you know, if you're a big shareholder, you can't sell. Do you know when that expired? Oh, it didn't yet. It expires on Friday. So it's my view that the market pulled back like it did in China in anticipation of more selling coming on Friday. Now, I'm darn near 20 minutes into this thing, and I haven't really even given you one stock, and I actually have about 23 of them to bang through, but this is really, really super important. Just about the time that the market stabilizes here over the next several days, it's going to be right back up 2040, 2050. It's all good in the hood. Look at this. It's a zigzag. Yippee-ki-yay. Everybody on CNBC is saying, well, this is volatility and we're going to go up and down and this and that. So we start ratcheting into stocks. I mean, after all, Apple was up today, for crying out loud. How bad could the market be? Apple's up. I had to do some self-editing here. Sorry about this pause here. The point is, just about the time that the market gets complacent, what happens on Thursday night? The Chinese markets are down big because this ban has been lifted, or if not Friday, on Monday. The bottom line is there's still a lot more potential selling to be had. Look at this. This is the US dollar versus the Chinese yuan. Okay, this is a strong dollar. This is a weak yuan. Well, what happens when the Chinese currency drops in value relative to the dollar? Everybody leaves. Everybody sells the yuan. Okay, it's not like they go to, I don't know, wherever you go to exchange currency. It's all in bonds, I'm buying the dollar, or I'm buying whatever. The bottom line is, if there's a real flight out of the Chinese currency, that's going to create even more downside. So all of this that I'm telling you is really good to know. I think it is. I think it's important, to keep these dates in mind, because if you can think about this kind of stuff, then you'll get to, hopefully where I am, and I'm not dogging on CNBC because I'm on them, a contributor, but you'll listen to some of the stuff that some people are saying on CNBC, and you'll go well, that's a bunch of hooey. This person has no idea what they're talking about, but they're sure talking their book. As opposed to now you're listening to every word. Because, the market's really confusing. Well, this person sure seems to know what they're talking about. Trust me, when I first started going on CNBC, I had no clue what I was talking about. But because I've got the gift of gab, I sure sounded smart. So keep that in mind when you're listening to me, as well as when you're watching CNBC. You got to know this kind of stuff, these kind of relationships, to make the right decisions. But at the end of the day, it's just about being on the right side of the trend, okay? Transports, you don't want to be here. I'm not going to go through all the airlines. Let's just look at We've been, I've mentioned this the last couple times, that this is a problem. This is definitely a problem, and this is absolutely a problem. This can go another 10%. Why couldn't it? Other airlines are doing poorly. Bank index is moving lower as well. Looking at Goldman Sachs, these can all get a little bit of a bounce. Just a short-term bounce, but the trend is still definitely down. And same thing with the NASDAQ composite. This is unless there's something weird that happens, we'll get a bounce here tomorrow. But all of these stocks are just going to be going back up into the danger zone, right back up into resistance. So I want to go through FANG to begin with. Facebook. Okay, this popped out of a volatility squeeze on the wrong side. Probably get a little move higher here, but it's running up against resistance. I'll be really surprised if this can make it through 105. Very surprised. Amazon, not working. Jeff Bezos is probably only worth $35 billion now. But this is a broken stock. Heavy volume, this matters. If you are saying I'm going to buy Amazon now while I get it while it's low, I want to urge you to try to use better imagination. Have some imagination. There's more to life than Amazon. I get the fact that this chart that I just showed, it's still in a nice uptrend, but if we're really looking at these zigzags, wouldn't 600 be about better? They report earnings on January 28th. Do you really think the stock is going to be at $637 just before they report earnings? No. It could be down at 520. It could be down at 600. It could be down so low that even when they report good numbers, all the stock does is gap right up into here. And if they report poor numbers that disappoint the market, I wouldn't want to be anywhere around there. Okay, Netflix. Another one of FANG, right? Okay, so this short-term rally, and the long-term uptrend is still kind of intact, but this is a stock suddenly that needs to do some work. Google, Uptrend is intact, 50-day moving average holding, but this was a high volume move. And no matter where the stock closed relative to the open, Dragonfly Doji, it's down 2.4% from Friday, or Thursday, I should say. So all of these stocks are suspect. They're also all last year's winners. Okay, last year and this year, 2 different years. You could check it out on the calendar. I did. Okay, Monster. The uptrend is broken here, but the stock really isn't. If you look at the weekly chart, you can see it's still generally trending higher. But you don't have to rush out and buy this stock at $1.44. Just watch it for a while. It's forming either a base or a top. Either way, there's no money to be made on it right now. Okay, EPAM. I just want you to be careful here. 200-day moving average is holding, but this is high volume. I wouldn't want to be long this stock right now. Not right here. Okay. Palo Alto, a couple of the cybersecurity stocks may be at good buy points. This has been trending sideways, seems like forever. You can buy this stock here. Just keep a stop a little bit below 169.20. Make it 168.80. How's that? FireEye is another one. It's just kind of putting in a base. The downtrend is still intact, but it's squeezing a bit. You could see more upside. But it is still in a downtrend. Okay, some solar stocks, just a couple of them. Sun Edison, starting to, I mean, this is a good move. This looks like this was the end of the pullback here. Sun Edison works. Solar City works. Both of these stocks are doing well. Looking at my notes. And the gun salesman of the year goes to, once again, for 7 straight years. Let's go 8. So there's talk of more, gun control, whatever that is. And by the way, I'm making no comment on whether that's a good thing or a bad thing. And I really mean that. It depends on what it is, because here's what I'm in favor of. I'm in favor of outlawing doing bad things with guns. I'm in favor of not letting anybody who's going to kill somebody get a gun, or anybody who's going to shoot somebody get a gun. The devil's in the details. I don't know how you do that and still give people the freedom to protect themselves. Anyway, that's my point. And so if you're a gun lover, what I said is grist for the mill. If you're a gun protection or if you're a gun control guy, what I've said is grist for the mill. And you'll be going like, oh, wow, I didn't know Dan felt that way. Bottom line, though, is this. Smith & Wesson is going higher. Again, it just is. I'm telling you. I forget when they report earnings. You're going to want to know that. But I can't imagine. I mentioned this last time they reported earnings. I can't imagine them not raising guidance. And they did last time. They're going to do it again. I don't know how they couldn't. Okay, GoDaddy. This is an IPO stock. Okay. This was the last high. Stock traded above that. Now it's consolidating. This works. Okay. Baxalta, a new high today. This is one that Aragorn and some, I think Judy Steiner, a few other people have been into this stock. This works as well. A recent IPO up to a new high, heavy volume. What's not to like? Do you know what's not to like? I don't own it. That's what's not to like. Okay. Kohl's. Some of the retailers are doing actually pretty well. They've actually done really well lately. This is working. Okay. Coach. My gosh, after taking the haircut that it took, it's starting to do well. I haven't looked at this chart. I'm just kind of curious. Okay. Michael Kors. Okay. I'm going way over here, but that's okay because I'm the one I get to control how far I go. I made a really bad move on Michael Kors a few years ago, whenever it was. I was dating somebody that I never should have been dating, way too young, et cetera, et cetera. And I was in New York. And I thought I was doing a really, really sweet thing. I went into the Michael Kors store and I bought her a nice handbag. I think the darn thing cost me like $250 or something. And I gave it to her. And this is why I say it's definitely the wrong one. She looked at it, and it's like she hardly even thanked me. She just goes like, oh, I don't really like Michael Kors. Okay, and so here I am. I'm thinking Michael Kors is a good brand. And here's some dingbat telling me that she didn't like Michael Kors. I should have immediately shorted the living snot out of the stock, but I never really did. I actually did make some money on the short side, but when you've got a young person who's very materialistic and has to have all the latest stuff. When you got a young person, that's like way too much information for you, but I'm not going to go back and edit it out. When you have a young person telling you they don't like a brand, you truly need to ditch it. You need to pay attention to that. And the reason I'm mentioning this is, okay, Michael Kors is building a base, whatever. I have no interest in that whatsoever. But Coach was a similar thing where, not with her, but I mean just in general, Coach was, they were doing great. And then I remember, because I was talking about this on Kramer's Mad Money, that they went and expanded the number of stores that they have, like basically to meet all the demand. They really expanded their stores. Well, what does that do? It makes a scarce item not so scarce. Okay, it's a hip thing to have until everybody else has it. Kind of like having the barbed wire tattoo around your biceps. You're really not cool anymore. Trust me, you're not. You could go ahead and get that removed if you want. So the bottom line is this happened with Coach. And it's still on this weekly chart drifting lower. All I'm saying is, for a trade, watch the 50-day moving average. If this pulls back and starts hitting a higher low, this could perhaps work okay. It could perhaps. It could maybe kind of sort of might want to. Okay, Lululemon, nice move today on volume. I think this stock has more upside, but it is the anti-momentum stock. Okay, the 50-day moving average is trending sideways. I'm just looking at this thinking this has come out of a choppy base. And that's it, just chop. Okay, the other discount retailers, TJ Maxx, just in a base here. Walmart, starting to, I mean, did you really think Walmart was going to go to zero? It just looked like it. It's starting to print a base now, 3.2% yield, so that's not too bad. I mean, it's not great, but, you know, it's better than a sharp stick in the eye or an ice pick in the ear. Okay, Target, I don't even know why I said that. Sideways consolidation, I would just wait for more upside here. These stocks, the discount retailers, the ones that I've just mentioned, they were just strong on a weak day, on a very weak day today. They really stood out to me, as well as energy, but I'm not going there yet. We'll let somebody else pick that bottom. But the discount retailers I thought were interesting, and this is one of them. Another one that I mentioned recently, it's not a discount retailer, but Lowe's, has come down to a good buy point here. I like this pattern. Let's see, Hormel. When you eat too much Spam. That's what you do is hurl. I mentioned this last week about how, because somebody was asking about shorting this stock, and I said, yeah, I'm not really sure that I would short it, but I absolutely wouldn't buy it. I compared it to Ambarella, which I'm not going to go to now. But when a stock is in a really nice uptrend, and then it just gets too far over its skis, and so the stock's pulling back now, and I still, you know, it just wouldn't be something that I would really want to short. And I'm comfortable with that because if you look at the very high, where the stock is now, it's down 2.5%. Shoot, the S&P 500 was down more than that today. This is just a stock that I wouldn't buy, but it also illustrates, and I teach this in my short selling course that you may want to check out. I think 2016 is going to be a good time for that. Anyway, this is one that I just don't think. I think it's a great pattern for differentiating between one that you want to short versus one that you just don't really want to buy. Okay. And then finally, General Mills, and don't forget, I got to remind you of something, so I have to remind me of something here. General Mills, this wrecked the chart back here. 3% yield. This is just essentially flatlining, kinda. In other words, it's still moving up. It's not exciting. It's General Mills, for crying out loud. It's what your kids eat for breakfast, and they're the poorer for it, I might add. But this is working, so just let that work. Okay, that's it. Way deep into this. One thing I wanted to mention at the outset, but I forgot to, and that is on Wednesday at 8 o'clock Eastern, I'm teaching a webinar on the ADX indicator, which is something that I did last year. It wasn't so much of a formal thing as this one is, but we just had such, like, people just loved it, and it was really, really useful. So Gary and I decided, you know what, let's just do a webinar specifically geared towards that. So I'm going to be teaching the webinar on Wednesday at 8 p.m. Eastern, 5 p.m. Pacific. And I want you to be there for that. We are recording it as we do all webinars. So if you can't see it, you can check it out later. Because of that, the strategy session will be tomorrow night, and then it'll be Thursday night. There'll be nothing on Wednesday because of the webinar. So anyway, I hope you can make that. It's going to be a lot of fun for me.